StockManor.com studios here in the Black Hills of South Dakota. I'm your Stockmanor Brian Johnson, and a really quick video for you guys recapping what we've seen here over the last few days, trying to catch you up on things. Markets have been nearing a top, putting in some sort of a topping action, but the question is when. We've been talking about it for weeks, we've been watching it for weeks, and the bulls continue to beat on the bears every time the bears look as though they're about to move it one way or the other. If you're an Elliottician, every 5 down has been met by another 5 up, so it seems a little bit difficult to get your grasp on things. So the best thing you can do here is risk management. Risk management. This market, if anything, since the middle of November to about the middle of December, has proven that yes, we can head a direction for a very, very long time. Without any kind of a pullback, whether it's a major drop to the downside without any move to the upside, or a major move to the upside without any major move to the downside. In this case, of course, the bullish action is what we've been watching. Let's look really quickly then at what we're seeing. Now, we've seen a break of this huge straight, I called it a parabolic type move to the upside by the bulls. Today, over the last couple days, I should say, we've seen a break of this support area right down into a beautiful area of support and a bounce and a move back up. This is stuck in limbo. You don't know if this is going to go up, don't know if it's going to go down, so you must sit and wait and use extreme caution at this point. It's good that the bears finally did break this line, but that doesn't mean that we can't see higher highs, and it doesn't mean that we're going to fall into the abyss or anything like that. It's really an area that you must watch extremely closely. So if you're a Dow player, here's one thing you will notice. The Dow was a huge lagger today. You're going to see a lot about non-confirmation, whereas the NASDAQ made new highs. The S&P and the Dow did not. The S&P was, or the Dow was especially weak today. Much further behind than basically about break even on the day. So you can see it as the laggard. Now, we've talked a little bit about how it seems that one market moves a little faster than the other, and that is very, very common, but they typically, as a whole, move in generally the same amount of terms. So if the NASDAQ's up 0.4%, the S&P and the Dow are usually at 0.35 or 0.32 or somewhere close behind. That was not the case today. There was quite a discrepancy in the movement of things at the end of the day. So you can see the market getting tired, but we have not yet seen the bulls give up. So watch this very closely. We're going to look at the daily here really quick, and you can see that we have had now a few days of a move to the downside, but with the exception of this day, we are still in a climb that takes us back to the middle of December, where we haven't seen an actual 1% down day since this. One day in, what, 2.5, 3 months now, where we have not seen major declines of 1% or more. This was the only day we saw it, and it was met quickly by buying, and lots of it, consistently up and up and up. You can start to see the volume start to pick up. I'm not going to pay a whole lot of attention to that. It is interesting to note that we are starting to fall back in here. This is actually a support area up here, so it's resting very comfortably upon that area. Your areas to watch are the 20-day moving average, and then back above this 13.3, 13.4 area. Those are your overhead resistance and your lower support areas to mark on your charts and to watch very closely. Going forward. So we did see a little bit of a pullback here. We're not seeing the same type of action out of the other indices, but doesn't mean that this is a leader by any means. Usually this just means that it's resting and the bulls are maybe, I don't know, about to take over again and run this thing back up. Want to be very, very cautious with your trading, as I said, though, in here with all of the moves. And just take note that we've been pulling back here for a while, and as long as we stay up in this area, it is more bullish than it is bearish. NASDAQ 60-minute did a beautiful job of breaking its support area on the gap down, but notice what it did. Ran right back up into it. It didn't waste any time whatsoever. None. Ran right back up into it, retesting the backside of that thing and on to new highs. Now it closed at 27.37. 27.38 here was the high, but the high was 27.40 of this day. So we did break to new highs. We'll see if the other indices do eventually follow over the next few days. But this, if it happens to turn around and see some major shot to the downside, it would be considered and could be considered a potential double top area. So something to watch for. 2740 and 2700. Definitely your areas of support and resistance as we head into the end of the week. This is nothing but a high base. Once we've reached 2700, it's been nothing but sideways up, which is the entire move from the middle of December. Look at this move, sideways and up, sideways and up, sideways and up. The bulls are not giving up in here. So use extreme caution. I'm very cautious about any and all of my long trades right now, using very good tight stops on all of my long trades, and I would suggest that you look into doing that for yourself. Your money, manage it the way you want, but stops and tight stops in this case are always a great idea so that you don't get burned to the downside. Risk management, remember, risk management is key. So in a high base here, looking for a little push to the upside here. We'll see if we don't get that action towards the end of the week. Still do have a few days left before that finally happens. Here's the weekly, straight up. And no reason to think at this point we won't get another up week. So I don't like to judge these till Friday comes around, but just keep in mind it has been straight up in the markets. The NASDAQ has been an absolute beast since we broke the 24-ish hundred area here, straight up from there. So if you've been long over the last few months, you've been doing very well. Those people in 401ks and whatnot have probably been very happy with their returns in anticipation of a pullback. We don't know when that'll happen. Could be a little while yet, but when that happens, we'll reevaluate. But as for right now, looking very good and strong to the upside. Keep those areas in mind that I gave to you, and we'll look at those weeklies at the end of the week. This I need to adjust a little bit. This line I drew in, and it's not being held correctly by stock chart, so I do apologize for that. But we have this same run to the upside, a break of that same type of support. Now today came back and sat perfectly at this 20-period moving average. No indication. Could move up, could be a high base and a move up, could be a drop. We just don't know. If there is any kind of a drop, the areas that you're looking for are for overhead resistance, 1415 to 1420, and 1425 especially being very, very strong overhead. So if you're going to play this long, be cautious up in these areas. To the short side, 1400 and 1390 being big major areas of lower support. Those are all areas for you to be watching in your trading as we press forward. Here's the daily, and you can see precisely where we're at. Look at how extended we've been. And look how we keep hugging this line, and we can continue to hug this line for a while. Look what we did back here. We had touches of it here. First of all, we used it as support back in here. Resistance here. Nice bounce away from it. Now look, hit, bounce away from it, hit, hold and hold and hold and run sideways, and hold and hold and run sideways, and hold and hold and hold before finally falling off from it, but running as quick as we can right back up into it. So hold and hold and hold and hold. Will we get the same type of a look? Will it roll over? I do expect eventually we are going to see that, but it's only a matter of I would say it's a matter of when, not a matter of if. However, this thing can continue to hold that line for quite a while. The point is, if you don't have this in your charts, mark it. Very, very important to have this. Shows you precisely where we're at in this nice little channel that we've been following now since, October. This goes way back, guys. So a very, very, very strong area of bullish sentiment, if you will. This will be a major areas for the bears to break if and when they ever make it back to this lower line. VIX on a daily. Know how I feel about this. We are in very, very low territory back here. I'll show you something interesting about this. Now, this is of course the VIX, and the VIX has been up, but you can see it has made zero difference in the markets. The markets were down a little bit today, and the VIX was up considerably. But this just clears room for it to drop again. Look what we've seen here. A drop to the downside, a moves up, which has not affected the market. The market moved up the same time the VIX moved up. A major drop to the 13 area and a move back up in the VIX, but that's not affecting anything. What you need to take notice of is that the VIX right here is in a very, very low area of what would be complacency. The market just is not really all that scared right now. There's no fear in the market, and the fear isn't rising by any means. Here's something else I like to look at that works in conjunction with the VIX. It's called the VXX, and it is the VIX futures, basically. And this is where a lot of people will bet on where they think the VIX is going to go in the future. And if that's any indication, it's been bleeding itself out, which means the VIX is going to drop back into those 13, 14 areas again before this is all over with. This thing has continued its move to the downside and shows no signs at this point of giving up. Just a hard, straight down push. So use the VIX just to give yourself a ballpark of where we're at. Use the VXX to give yourself a better idea of maybe exactly where we're at with everything. 1, 2, 3, maybe this was a 4 with a 5 down. It's still way too early to tell. But for you Ellioticians out there, these are the possibilities that we're putting in some sort of a short-term low, but not yet. Not yet. So very, very strong movement by the markets. Bulls doing a fantastic job. This is just a consolidation on your FAS. These are your financials, and the financials have done very well since the bank tests were reported, and the bank stress tests all came out okay. So as you can see here, a parabolic shot to the upside with now 114 and 106. I'm going to give this a wide range here for you to watch. 114 and 106 are your support and your resistance areas going forward as this thing consolidates into what will maybe be, I don't know, a little early yet, but maybe be a triangle. But at this point, holding nicely to some overhead support and looking for a push, I would say potentially upwards from here. Once again, the levels that I gave you work very well on the daily as well. 114, 106. Those are both of the areas to watch as we high base, as we're seeing in the markets. FAZ, which is the inverse to this, is very well contained between 20 and 21. So those are your support and resistance areas coming into the end of the week. And here's a great look at what it's seen. So as we've seen the SPX grind against the top of a channel to the upside, look at the FAZ grind against the lower part of a channel to the downside. So will this precipitate any kind of buying, any kind of bullishness within the market? Way too early to tell. Just know that we are into a very, very strong level of lower support here on FAZ, but as everything else has shown us, it can trail this line for a very long time. So you want to make sure that you're using a good risk management. I know FAS and FAZ are very, very popular things for people to play, but you have to be extremely careful with these as they are 3-time ETFs, probably better meant for day traders as opposed to swing traders, and a very good way to bleed yourself quickly because you lose money 3 times as fast when it doesn't go your direction. Keep that in mind as we enter the end of the week. So good risk management. Got to save that capital. Without good capital, you can't trade. So still waiting for the pullback. It's not a matter of if, it's a matter of when. But as you can see, that when hasn't come. Everybody kept expecting it in February, January, February, and now we're almost all the way through March. Still no signs of the bulls giving up. Just a straight on push to the upside. So use caution if you want to go long. But, once again, stay with the trend, stay with the market. All right, guys, here's your update, and we'll see you in a few days. Bye.